Hi, good morning. Good morning. Good morning. Good morning, Manjay. Good evening, Ronak. Good morning, Gagan. Thank you, everyone. We give a couple of minutes and we'll start. Good morning, Shikhar. Good evening, Shivam. Good morning, Sunny. Thank you, everyone. Thank you for joining. 30 more seconds and then we start the class. Good evening, Saurav. And let us begin. Thank you, everyone. And I appreciate you joining the session. Everyone, thank you all. And we appreciate your time. We appreciate you joining the session. So thank you all. So let us briefly recap what we did yesterday and what we talked about yesterday. Guys, just give me 1 minute. I'm getting a overseas call. Just 1 minute, please. Okay, so I'm back now. Sorry. So yesterday, what we discussed and what we talked about was the process of incoming payment. So we did that exercise. Um, and so we did yesterday end-to-end sales cycle. In that we talked about incoming payment and how do we do through check. We verified the journal entry. We did the deposit in the bank. We did a journal entry for that. In the system, we saw that journal entry happens at the time of delivery, at the time of customer invoice, at the time of incoming payment, at the time of deposit in the bank. So these are the 4 places where journal entry happens. Then we talk about end-to-end purchase cycle, and then we have We create a purchase request, we create purchase quotation, we create purchase order, and then we did a good receipt. Then we verified the general entry there, and then we did the vendor invoice, or we call it AP invoice, and that time also there is a general entry. And then we did an outgoing payment, and then in the outgoing payment we did general entry there also. So that was another place. Good evening, Prabhat. And then we did another exercise. In that exercise, then we also talked about how do we do end-to-end sales cycle using the bank transfer, and how do we do end-to-end sales cycle using cash payment. So these are some of the exercises which we did yesterday. Okay. So good evening, Gaurav Sharma. Okay. So now in this topic, we want to talk about financial reports. One of the results, one of the outcomes of the finance is being able to produce financial report. Several of these financial reports are legal, it's statutory. So in many countries, for many companies, being able to produce a balance sheet which is acceptable by government, being able to produce balance sheet which is acceptable by government and as per the government law, is not a business requirement. It's actually a legal need. Okay. So that is what actually happens when we are talking about financial reports. That is where the financial report come into the picture. In the financial report, there are many, but there are three most important: balance sheet, trial balance, and P&L. If I go back to SAP Finance, out of the box in the standard SAP, and if you go to financials, so here we have balance sheet, trial balance, profit and loss. There is a cash flow also. But there are three, which is important. So here we have these three: standard report in SAP Business 1. Okay. The next one we talk about the business scenario, which we talk about that at the part of the year-end closing, we need the balance sheet and profit and loss. So when we close the books, we talk about the financial period. We discuss that financial period in SAP. Okay. So at the end of the year, then we can produce these financial reports for each year. What was my balance sheet for 2019? What was my balance sheet going to be in 2020? What is my balance sheet of 2018? What is my profit and loss for 2019? What is my profit and loss for 2018? So we produce all those different balance sheets and other objects as a part of statutory reports. Now, in this, what we're going to discuss is, first and foremost, is chart of account. So remember, we talked about chart of account. So here, we had a discussion about chart of account. And in the chart of account, we talked about that there are certain drawers. Okay. Here, in the chart of account, we can have something called, different buckets: assets, liability, equity, revenue, expenditure. So all these different buckets are there, and then these buckets, the way they are structured, has influenced how the system going to read your balance sheet and profit and loss account. And then, based upon this, there is a balance sheet, there is a trial balance, profit and loss, and there is also cash flow. Okay. So here, when we talk about the balance sheet, so they have assets. So we see here on the top bucket is assets. Different type of assets. And within the asset also, if I click on the asset, if you see that here, there is a fixed asset, and you can go in different levels also. So we go to assets, tangible asset, formation, express, and all those different plant machinery, fixtures, motor vehicles, investments, current assets. In the current assets, you have stocks, stock account, where you have inventory, raw material inventory. These are different buckets defined. This is what you're looking at is a standard SAP. Now these accounts are just an example, as we discussed 100012. So we see 101001. That's example. Okay. Plant and machinery. This is a bucket. Within the plant machinery bucket, there is account 111000. Now that is example. Okay. And that is what we see here. So you can have assets, and you can divide those assets into different buckets. Assets can be converted into liquid funds at a short period of time. So some of these assets, normally we call it current assets, are the ones which can be converted into liquid, means you can convert that into money, liquid funds. So many of the assets, machines, equipment, you can convert that into on a short put notice. That is what this basically means. Now we talk about the chart of account. Let me go back to the chart of account. So we have asset, liability, and all that. So the top, so when you say the bank account, that is your assets. So how much money you have in the bank or you don't, that is part of your asset account. Then you have a liability. In the liability, you see there is an account payable, means how much you're going to pay to your vendor. How much you're going to pay to the vendor is your liability. You can also have your income. Income comes from your sales. This is come from purchase, and income come from sales. So if you remember, when we get a customer invoice, at that time, system creates income account. Then you have a different, so these accounts, where you have a different kind of expenses and all that, these are part of the profit and loss account. If you see here, asset, liability, equity, They are the balance sheet. Then your revenue and expenditure, that is part of P&L. You have a bucket number 6, 7, 8, 9, 10. You can define further buckets also. I have a 5, you can define 10. So the 10 buckets, 10 drawers, which is there in SAP. Is this part of SAP MM? What is part of SAP MM? Okay. So here, so in the top, these two drawers, drawer 1, drawer 2, drawer 3, part of the balance sheet and account. And then these, turnover, cost of goods sold, operating expenses, non-operating expenses, they are part of your P&L. So that is how you differentiate between your balance sheet and P&L accounts. Okay. Now, what is the influence of that? So this is the influence. So let's understand this. So these balance sheet accounts, which is asset, liability, reserve, etc., they are part of your balance sheet account. And then these 3 buckets, which is your turnover, cost of goods sold, operating expenses, that is part of your profit and loss account. And then we see the trial balance. Trial balance has both. Trial balance has every account. I would like you guys to make a note of these 2 bullet points which I highlighted. Make a note of that. Balance sheet report is based upon balance sheet accounts. Profit and loss statement is based upon profit and loss account. Trial balance shows all accounts. Trial balance is everything. All accounts. All accounts you can have. Okay. I would like you guys to make a note of this. So that becomes the origin of balance sheet. So balance sheet comes from balance sheet accounts. Profit and loss come from profit and loss accounts. Trial balance has all accounts. So that basically means if I go to asset bucket, for example, so in asset bucket, if you have anything, let us say in this account, so in this account, plant and machinery, I have a balance of 289,000. That is part of my balance sheet because assets. If I go to liability bucket, if I click on the liability, and these are different kind of liabilities which you have here. These are all different liability accounts which you have. Liability means which you are supposed to pay. For example, you are supposed to pay to the vendors. What you are supposed to pay to the vendor is a liability. These are the all different liability accounts which we have here. Like for example, there is a trade, creditor, domestic. So for the domestic suppliers, we are supposed to pay this amount. This is my liability. My assets, my liability. If you go to equity, so here we have some kind of equity account, some kind of a share capital. In the share capital, this is my balance sheet account in share capital. Then we go to revenue. You see the revenue comes from sales. We see that this account, this is my revenue account. So my revenue account, this is what you have, 120,000. If you see my expenditure, these are my different expenditure accounts. Material expense, labor expense, salary expense, whatever, different expenses. Education and training, this is my balance. Then we have a freight and all that, this is my balance. Electricity, this is what my liability. This is my expenditure of electricity. This is my expenditure for water. This is my expenditure for the gas. This is my expenditure for the telephone. So they're all your expenses. That comes as a part of your revenue and expenditure, profit and the loss. So all these different buckets is being defined, and whatever posting happen in which bucket, that correspondingly it goes to balance sheet or it goes to profit and loss. That is what this basically means. At the end of the fiscal year or financial year, so at the end of the, so we go to trial back, so we go back here, and the last day of each fiscal year, we can close. I'm going to show you all these reports. Then you can see how each of these reports look like. So we have a balance sheet. So we talked about chart of account, and we saw in the chart of account that we have different buckets, and whatever the bucket, whatever the posting which is made in what bucket, and that bucket goes into that particular report. Balance sheet, profit loss, and most companies are the statutory legal report you need to produce. Your taxation, your company's health, and everything is being determined on the basis of these reports. Your balance sheet, your trial balance, your profit loss. So here we have a report that is called balance sheet. Now, where is the balance sheet report? So we go back, we close this, we go to the bottom of it, and here we have a balance sheet report. So if I go to balance sheet report, if I go to financials, and here we have balance sheet report. Let's see that here there is a balance sheet report. In the balance sheet report, we can have the selection parameter, the first and foremost. So in that case, basically means that so here we have the posting date till this day. That is what we see here. So we have balance sheet date up to certain date. So here we have a date. Now, apart from the date, we also have a different selection parameter. Do we want in the local currency, system currency? Do I want in both currencies? So you have a choice. We talk about what is local currency. We talk about what is system currency. And I want to display, for example, like in both. So you can get your balance sheet in local currency and system currency both. Do you want to include your vouchers? If you have some vouchers you want to include, you can do it. Do you want to add your opening balances? Do you want to ignore any kind of adjustment or adjustment accounts if you have? Revaluation. That basically means if you want to do the revaluation in terms of there is some kind of a okay. So that basically means we can define a rate. I want to do it. I can want to do revaluation. The US dollar, we have a $70. Do you want to change it? This is what we set it up. British pound is $80. Do you want to change it? Because that is what we fixed it. Remember, we talk about the exchange rate exercise and all that. Canadian dollar is 40. If you go to expanded here, then you have some additional parameters which you can choose your blanket agreement or some other fields and some reference fields and all that you want to add. So you have a different additional selection parameters which you see here as a part of your balance sheet. So this is where we have a balance sheet here. That is what you see here. So we talk about in the balance sheet, we have assets, liability, and owner's equity accounts. So these are the three types of accounts which appears in the balance sheet. And those three kind of accounts we discussed, you assign in your chart of account. And whatever the GLs are there on those three buckets. So asset bucket, liability bucket, and equity bucket. And you have a certain an asset also we talked about. Asset could be of different type of asset, and this asset and that asset and that asset. There could be different subcategory of asset we talked about. Same thing, liabilities, what you're supposed to pay. So you can, your vendors and liability also you can divide into different categories. How much your liability for, paying to your export vendors, domestic vendors. You can have different buckets of the liability. And then you can also have some owner's equity accounts. So we can do that owner's equity account as well. So this is all part of your balance sheet. The different buckets, the calculation which you see in SAP. Now, if you want to run the report, so let's say, and it's very simple. If you see that here, if I hit enter, system will run your report. So that basically means so here we have, and you can also have a label. You see that this is label 1. So assets, liabilities, equity, label 1. This is label 2. Assets, fixed asset, current asset. Liability, current liability, long-term liability. This is my equity, share capital, premium account, whatever. Then we go to label 3. See the label 3? It goes to label 3. So in the liability, you have current liability, creditors due in 1 year, long-term liability, creditor due after 1 year. So what is the example of current liability? Which is due within 1 year, that is current liability. What is the definition of long-term liability? Creditor which is due after 1 year. This is an example. Label 3. If I go to label 4, this is the label 4. So in the assets, so if you go to here, we have a current asset in the stock. Raw material stock, this much. Work in progress, this much. Finished good, this much. Trade debitor, this much. Other debitor, this much. Okay. These are your liability, the current liability, which you're supposed to pay within 1 year. Okay. And then we can have all these different accounts. Level 4. If I want to go to level 5, we can go to level 5. This is level 5. Now, in that asset, if you have all these different, I have some asset called office and equipment. Now, if you see this office and equipment here, and if you click on this yellow button, if you click on it, it will take you to the chart of account where you see office and equipment. And when you go to the balance, and if you click on this balance, it will take you the individual detail. So that basically means you can review, you can audit each number. So for anyone, for example, I want to see that, okay, in my asset bucket, I have a fixture, fittings, tools, and equipment. In that, I have office equipment, and this is the amount. And from where this is coming, right? So how the system has calculated this, because I want to review whether this number is right, this number is not right. So if this number is right or not right, then we can see the office equipment, and we see so if you see in most of these accounts, there is a yellow sign. Wherever you see the yellow sign, that basically that is a GL, and you can review the detail. So if you want to go to office and equipment here, this account for example, and you click on it, and this account tells me that my balance is this much. Now I want to see that what is the detail this account comes. And then if we click on this button, then it will take you to the balance. So this is a summary. So this is a balance 182,000 and 182,630, and this is coming recurring posting on this day, recurring posting this day, recurring posting this day, recurring posting this day. I close this. Now here I have some stock accounts. So if you see here, so this is my current asset. Okay. So here we have a asset account 1300. In this asset account, this is my total amount 278. If I go back to the asset account, and this is my asset value. If I go back here, and if you see my asset value, so this is my asset, and this is what is kind of asset? This is my current asset. This is my stock. This is part of raw material and consumable. This is my stock account, and this is my account number 130000. In that, I go to balance, and this balance is 279. If I click on it, and if I click on it, then you will see that in 20, these are the different posting which happen. Each of the posting you can verify. So when we do the account balance, if you see the posting, you can check each of the posting. So we see here on 10/28, which was yesterday. So yesterday 1, 2, 3, 4. We did these 4 entries 1, 2, 3, 4. For this 170, we create transaction number this. This was a DN. DN means delivery note. This was with reference to this. Offset account was this. And delivery was created for customer C300. And what was the result of it? The result of that was basically whether this account was credit and debit in the local currency, and what was my cumulative balance after doing that. So you can go back and say, because yesterday we did these 4 transactions, all those 4 transactions appears here. I have this delivery, this good receipt. And now see this one is a good receipt, PO. So there is a debit entry. Because this is a PO, there is a debit entry. And because these are the deliveries, because inventory went out, it was a credit and credit. This was credit, this was credit. This was a PO, this was debit. So that basically is me every time your inventory coming in or going out, in every situation, there is a corresponding entry which is hitting your balance sheet. Now, if something is not reached, so here, each entry you can review, each entry you can audit. Okay. You can define any account, right? Whether lease or whatever. So here we can have all these different accounts, and we saw the detail, how each of this detail in the balance sheet look like. Okay. Now the second thing is trial balance. Okay. Now trial balance is a summary of all account and or business partner balances. The trial balance include all accounts. So the account could be from balance sheet, those accounts could be from P&L, and it's also include all your business partners, which basically means it's also include your customer and vendor as well. This is another report. So what is the trial balance? Make a note, trial balance display a summary of all accounts and or business partner update. And total balance should be zero. So credit side and debit side both should be zero as a part of trial balance. Your credit side, your debit side, both should become zero. Now, where is this trial balance? So here, this is a trial balance. This is a trial balance. Now here, we have all these different selection parameters. So I want to include my business partners. I want to include all my general ledgers. I can select the date I want. So if I go back here, I can select the date, whatever I want. So let's say I want, I want April 1st, 2020 till April 30th, 2021. I can choose the date from here. Here we can select the date. I can put it, let us say, March 31st. What accounts I want? Do I want all of them? Some of them? Do I want business partners? If I want some list of the business partners, if you go to drop down, you can choose if you want some account only. You want all of them, some of them, all customer groups, all vendor groups. And here you have all these accounts. You see the asset accounts, liability account, equity account, revenue account, expenditure account, all the 5 buckets. All the 5 buckets we have. That is the selection parameter in the trial balance. You can select the period. You can change the period. You can select all accounts, balance sheet, profit and loss, some of them. You can select all your business partner master data. These are all different accounts. You see the select all accounts get selected. You don't want business partner, you can remove it. You want it, you can select it. You don't want GL account, you can deselect. You want it, you can select it. You want level 1, 2 detail, you want level 2 detail, you want level 3 detail. You can go to label also. You can go level 3 also, or whatever level we want to go. We have a label also. You can choose the dots. You want a balance sheet account, business partner, we talked about. And then we can run the report and the balance will be 0. Now if you see here, and if I select all my accounts, I select all my business partners and I hit enter. So here, what system tells me? Now system tells me that this from this date to this date, from April 1st, 20 till March 31st, is not March 31st yet. And it includes all my general ledgers. This is the opening balance, debit, credit, accumulated debit, and the balance. And we can keep going all the way in the bottom. As you see here, my total debit 8160703.33. My total credit is 8160703.33. My credit, my debit matches. These are for all my different general ledgers. Then these are all different my customers. So these are all my customers. These are all different customers. These are all my total. These are my total customers. In the customer also, my debit entry and my credit entry. And here we can get total vendors, total customers. If you don't want, let us say, a customer vendor, if you go to trial balance, let's say, I don't want business partners. I only want my customer. I select all my geo. I hit enter. This is, you can choose selection parameter, selection criteria. You can run your trial balance. Okay. So that basically means based upon your selection criteria, you can basically enter the data. That is what we see here. Now we go to the next one and the last one, that is the profit and loss. Profit and loss. This is the third report. So we go to profit and loss. It is in the name, right? So we have profit and loss of your business for the fiscal year in selected period. So we're talking the P&L. So here we talk about the balance sheet, we talk about the trial balance, and then we have P&L. Now the P&L also, we can define the date from this date to this date. Now the date also, you have a posting date, document date, due date. So we say posting date. You want to select foreign name, a customer name, account with a zero balance or not? Do you want local currency, system currency, or both of them? Do you want this report in the annual report, quarterly report, monthly report? So you get a different format. You want to add your vouchers. We talk about the revaluation. You want to do the revaluation based upon change in exchange rate. On today's date, exchange rate has changed. I want to revaluation. And then expand it. You have additional parameters if you want to include some projects. Because in your company, you might have different projects. You want to include them or not? Do you want to do your department? If you have some department, this is coming from cost center also. If you have some line of business, if you have a work location, you can choose those parameters as well. And that is what we see here. We can select different dots. So what profit and loss do? Profit and loss statement shows the profit or loss of your company for the fiscal year or for the selected period. So whatever period we choose for that, it gives us profit and loss. We can put a selection date. We can put a date, this date. Then we can define draw types. Here you can select the different draw. You want profit and loss account. You can choose that here. What is example? So we say AR invoice, customer invoice, example of income. Vendor invoice is example of an expense. and that is coming from the drawers. And you can drill down. So here we go to profit and loss. So we go to P&L. So here we have profit and loss. And here also we can see this is level 1, expense, revenue. This is my revenue, this is my expense. Then level 2. In the revenue, I have a gross sales revenue, sales discount, expenditure, your material expense, labor expense, utility, insurance, depreciation, salary, benefit. Third, this is third bracket. This is fourth bracket. In the revenue, from the top, there is revenue. This is revenue count, 40000. And then here we have a sales revenue count. And again, I can get drilled down. Each of these entries are here. See that these are all my AR invoice, AR invoice, AR invoice, AR invoice, AR invoice, credit memos. These are all my revenue statements. Yesterday, we did some 1, 2, 3. When we did the class, we did 3 examples. So 3, this was 24,033, 24,030, 24,030. Okay, so we can define all of that here. So these are all my, and this all appears in the sales revenue. This appears in the sales revenue. Okay. You can drill down on the chart of account. We saw that, how we can drill down. Each of that account, we can go back and see the individual posting. And we can correct, we can review, we can order. We say if the sales revenue is high or low or correct, incorrect, whatever it is. The total liability, asset plus equity. We talked about this, like in the balance sheet, we have asset, liability, equity. So from my chart of account, my asset account goes there, my liability account goes there, my equity account goes there into the balance sheet. That is what we have seen. In case of profit and loss, in P&L, we have profit and loss account. So we have a revenue account, we have expense account, and they go to the, so this goes to balance sheet, and this go to profit and loss statement. Okay, that's what we see. So summary. Now there is a cash flow. For the cash flow, what I've done is I'm not going to talk about it because for cash flow, I have a detailed video, I think it's an 1 hour or whatever, on my YouTube channel. So my YouTube channel, you'll find in a video on cash flow. So if you go to my YouTube channel, and then you'll find there's a detailed cash flow 1 hour presentation which I have in the system. Okay, so go there, you'll find it. That is the cash flow. I have spent, I think, an hour talking about cash flow and how the system cash flow does. So all these things I have described in that video. It is on my channel. So you can go to the channel and then you can see it. Now, one thing which I want to quickly talk is for a couple of minutes is aging reporting. Right? Now, in aging reporting, there's a customer aging and vendor aging. Those two things are very important. So there's aging report for customer and vendor. So now where it is, if I close all this, If I close all this, we close all this. Then here in account, if I go back, there is aging. So this is aging. So here we have customer receivable aging, we have customer liability aging. So this is aging, this is aging. We have a aging for customer and for vendor. So we have a customer liability aging, opening balances for the vendors, debit, which we need to receive from various customers, and there is a vendor liability aging, and that's another report. So where it is. So let's look at it. So here, so we have a customer receivable aging. So here, if I want to see my customer aging, I can select my customer, which which customer to which customer. There is a blanket agreement also. Many times we have agreement. We can choose agreement also. We can select agreement also. That so there is a blanket agreement number. So if you see that I have some agreement, and these are some of the agreement which you actually created. And then I can select customer also. So which customer do I want? All of them, some of them, one of them. So I can select the customer also. So let's say I want this customer. Which customer group I want? You can select all of them. If you select all, or I want some specific customer, so you have a choice. You can choose a specific customer also. Aging date. I want aging in 30-day bracket, 60 days bracket, 90 days bracket, 120 days bracket. Posting date from open till this date. We can choose the date, what date we want the posting to be done. And then we say OK. So now for this customer, right click. For this customer microchips, this is my balance due. This is incoming. In 1 to 30 days, this is the amount. For 30 to 60 days, this is the amount. 61 to 90 days, this is the account. 90 to 120 days, this is the account. 120 days, this is the account. So these are the different brackets. If I go back, and here you will get each individual invoice. These are each of the invoice. So these are all invoices we have done with this customer in this year. This was a general entry which we did. These are different postings we have done. You can also do different postings for this customer. These are balances due. Now, these are also there in the different buckets, 1 to 30 days, 31 to 60 days, 60 to 90 days, 90 to 100 days, and 120 days. So obviously the older one is overdue. If I want to choose some different customer, for example, so I want to see what is going on with this customer called Earthshaker Corporation. So this is Earthshaker Corporation. And these are the different transactions we have done with Earthshaker. These are different transactions with Earthshaker. We can select different currencies also. Which currency I want. Business partner currency, system currency, local currency. Become INR, you see that? I want in system currency. Become US dollars. I want to see British pound, become in British pound. As for the conversion rate. I want to check in euro. Become the euro. Okay. So this is my customer liability. This is another important report. And then we have the vendor liability, which is another report, which is important. So here also we can choose the vendor we want. We can enter the vendor. We can choose any vendor. Like these are all different vendors which we have. And say for Acme Associates, what is going on? So we select my Acme Associates. This is my vendor. Do I want to select my blanket agreement? Do I want all vendor groups? Do I want an interval of 30 days, 60 days, 90, 120 days? And then posting date from this to which month. So we want posting being done for till 20, and let us say I want a posting which is done till October 29th. So till today, what posting we have done for this customer, and then we hit enter. So for this customer, these are all different entries we have done so far, and we can also put a flag. And you can see that okay, these are the documents, dates, due dates, balance due, and then there are brackets 1 to 30, 31 to 61, 60, 90, 90 to 100. You can collapse all. You can see summary. This is summary. Expand all. You can see expand all. Okay. So this is what some of the important reports we have in the system. So what we have discussed in the class. We discussed in the class, how do we do balance sheet? How do we do trial balance? We look at the debt report. We look at the profit and loss. We look at the customer liability. And we look at the vendor liability. Okay. So we should call it aging. Aging is the right word. So it's called aging. Okay. So these are the different aging. Okay. So yeah, you can choose a date if you have. So there is a part of forecast, cash flow. So, and I mentioned to you that there's a cash flow, and I put a detailed video only on the cash flow for 1 hour. You can watch like how the SAP cash flow for the works. So with that, thank you all, and we will talk tomorrow. Thank you. Thanks. Okay. Thank you, everyone, and talk to you guys tomorrow. And we'll continue discussion where we end. Tomorrow would be our last class. So thank you, everyone. Bye, guys. Thank you.